All right, folks, weekend's over. Back to work we go. And boy, what a wild start to the final week of January. Now, as wild as that big crash was late last night, there are really two very simple clues on these charts that are telling us that if we're lucky tomorrow, we might get one of my favorite chart patterns. I call them slingshot reversals. These slingshots can produce some incredible moves, and I want to talk about why I say this, the two clues I see, but more importantly, I want to give you guys a roadmap, some entries, some exits, some trade setups. I want to make sure you guys have a roadmap to make some money on a slingshot reversal tomorrow morning as well. So charts are ready. Got a big week ahead of us. Let's not waste any more time on the intro. Let's dive right in and find some winning trades for tomorrow. S&P and SPY is all ready, as you can see. Nasdaq, triple Qs are all ready. Glad to have you with me here tonight as well. I see two clues on the charts right now that I think make this a pretty easy job for us tomorrow. One big clue is right here on the hourly charts in front of you. That was a very strong move down on the S&P and SPY. Even stronger move down on the Nasdaq and the triple Qs. Now, why is that a big important clue? Well, because let's put this into context. On both the S&P and Nasdaq, we had been a pretty bullish market going into this weekend. Then we see a strong shot going lower. Put those two clues together. Whenever I see a strong move down in an overall bull market, it tells me the sellers are going to try, they may not be successful, but they'll try to retest that low before we get that run back higher to resume the overall bull trend. So one of two big important clues: strong move down for the S&P SPY, strong move down for the Nasdaq. Expect these bears to try to retest that low, before we make that run, resume the big trend up overhead on the higher time frame. Now, that's one important clue. There is, believe it or not, one even more important clue on some faster time frames that tell us that the sellers, they may not have as easy of a job as they may think right now. We're going to grab that second clue in a moment. Before we do that though, let's check schedule for tomorrow, because this is one heck of a week this week. There's two major news events for tomorrow. Durable goods and consumer confidence are the two big news events on our radar that may move the markets tomorrow. But let's face it though, everyone right now has shifted their focus to the FOMC announcement coming out on Wednesday afternoon, and we have some huge earnings on Wednesday afternoon and Thursday afternoon. So I would love to say the durable goods orders, consumer confidence, yeah, those are on my mind for tomorrow, but I would imagine as more information comes out about the DeepSeek AI, right, the AI platform, the ChatGPT killer, as we're calling it in our trade room, as we learn more about that, that will definitely be something to keep an eye on the next 24 hours. But make no mistake, everyone wants to hear from the FOMC. Everybody wants to see those earnings later on in the week. So we'll keep our eyes on the durable goods orders and the consumer confidence tomorrow morning. But again, I think all eyes right now are on what is the next development with DeepSeek. And of course, focus shifts now to the FOMC on Wednesday afternoon. Let's get back to our charts though. As I mentioned earlier, one big clue here is on these hourly charts, right? Bullish overall, strong run down. They're going to want to retest the low before we run back up. That's one big clue. But let's now go to some tick charts. Tick charts are based on volume. One tick is one transaction. We don't trade time charts. Time charts make the job a lot more difficult than tick charts. This, by the way, is a 7,000 tick chart. You can find all the time frames up top, the upper left-hand corner. And if you're watching for the first time right now, that yellow line right there is the only indicator I use to find winning trades. Is the 21 EMA. Now, I promised you one more important clue here on the tick charts. You can see right away here, it is this bull run up into a trading range. Now, there's lots of reasons why this is an important clue. First of all, ranges act like magnets. So whenever I see a pop up like that into a trading range, think of this as an anchor. right? It's not going to be as easy now for bears to go all the way back down and take out that low because it really anchors this market higher. More importantly, ranges love to rotate. They go up, down, up, down, up, down, up. Now, this is a bullish range, so because of that, there's more likelihood now we rotate back and forth, and then one of them breaks free and gives us a breakout pullback off that trading range. Now, there are probably 3 ways we can make money tomorrow with a breakout pullback. I want to talk about that a bit later on in this video on the Nasdaq because that may happen here overnight. My favorite trade though for tomorrow and what really creates a slingshot reversal is a bear trap below that low. If you understand all the clues we've talked about so far, we know that hourly chart, these bears are going to try. They may not be successful, but they're going to try to take out that low before they give us a chance to run back higher again. Combine that with a trading range. Again, ranges, they anchor the market higher and they love to rotate. I would love to get some bear traps and buy that bear trap off that low because what happens is in a bullish range like this, if I can get some bear traps down here, it can slingshot off that low and there can be a bunch of different entries we can use to trade that rotation, or as I call it, that slingshot reversal off of that low. You know, for example, one of my favorite trades for tomorrow is I would love to get that breakout going lower and simply try to trap in some bears who are chasing after it. There's 2 entry patterns I'm going to look for. One is a simple failure pattern. Let the price pull back. Remember, I'm not going to pick a bottom on this. I'm not going to blindly buy down there. What I'd rather do is, knowing that this is a horrible spot to be selling because the range overhead, I'm going to wait for bears to try once, go higher, try twice, and what I'll do is try to use their stops to fuel this move going higher, fuel that slingshot reversal going higher. Now, be aware, the market wants to rotate. It wants to rotate from the amount below, the amount above, right? It wants to rotate or slingshot off of that low. So if you want to make more money with this, the easy way to do it is to add to your winners. Now watch this pattern setup. This is a bear trap setup. It's a technical, true bear trap. A shallow pullback, a higher high in price. The key to this is that pullback is very shallow. It doesn't pull back to the moving average like over here, right over here. See what happens, right? It pops up, shallow pullback, goes higher. Look what happens. Everyone piles on underneath those scenarios. So now back over here, if I can get this to rotate off of that low, we know the market wants to slingshot higher now. Shallow pullback, higher high in price. I want to get in right below that low. Easy way to add to your winners. I call these failure patterns. And these are basically technical, true bear trap patterns. That's one way I want to buy the slingshot reversal off of that low. But here's the problem. There might be so many buyers waiting down there. You know, I want to trap the bears in, squeeze their stops, but a lot of times the gig is up. A lot of times people pick up on this slingshot and we don't get that bear trap down there. What if it goes lower and just whoop and runs right back up again? What if it V bottoms, right? Like that once again. What I'll do is if it V bottoms off that low, what I'll do is I'm going to find a new bull channel. Watch closely here. I'm going to draw a trend line off these highs. I'm going to bring that trend line down around that low. That creates a bull channel. I'm going to look left. Start thinking about these prior swings. What I want to buy that bear trap pattern off the low of that channel. Now, in all reality, this could be any of the entry patterns you guys are learning in my free video classes. It could be a failure, a trap pattern, a pullback combination. What I care about though is I don't want to chase it as it goes higher. I want to participate in that slingshot reversal, but I don't want to buy high. I want to buy low. These V bottom reversals can be challenging on our patience, but that I'll tell you your patience will be rewarded in these situations by grabbing that first test. The first test is always the best test. Now, I have a few more trades I want to talk about here to buy that slingshot reversal. Before we go any deeper right now, I know that most folks watching tonight, you guys know these patterns already. You're making money with these already. But if you're here for the first time, watching for the first time right now, this might be way over your head, a new language, a different strategy. I do look at things a bit differently here on this YouTube channel. So if you want to learn more, I teach the entire roadmap. In fact, I have a ton of examples of failures, traps, and a whole lot more. Guys, I cover so much more of this in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that short video course will teach you a stupidly simple trick we use in our members trade room that tells us literally exactly where the best winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry patterns so you can time better entries, make a lot more money. Guys, the markets, bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves all the trade examples I include in that short video series. The best part is it is 110% free for you to learn all the details we'll talk about tonight in this video. And keep in mind too, guys, I'm going to put all the important links you'll need to learn more. I'll put all the additional details for you in the description of the YouTube video. Start first with the free video course. Most folks start making money all on their own just with the techniques I teach in that short video series. So start there first, then come join us every morning, 8 o'clock Eastern time in our trade room. I'll put trade room membership links down there for you. And if you're on Twitter or X as they call it these days, I post a ton of charts and videos and minds and stuff on Twitter X. Give me a follow. I'll put, again, all the details, description of that YouTube video. Okay, where did we leave off? I talked about, and again, in a moment, I'm going to talk about a breakout pullback here. There are 3 types of breakout pullbacks. You will laugh how simple these patterns are, and boy, do they work remarkably well. We mentioned though, my favorite trade for tomorrow is run lower, trap the bears in, squeeze those stops. Now, here's one thing you got to remember. Remember, these bears, they may not go easily. They may not go up putting up a fight here. With that strong run down, the bears are going to try to retest that low. What happens a lot of times is we'll get that run lower, we'll get that bear trap, we'll get that what I call failure patterns, bears once, bears twice. We'll get the chance to squeeze those stops, but instead of getting that full reversal, that slingshot reversal we love so much, oftentimes all I get is a 1-to-1 first target. My stop moves up to point of entry. It's a winning trade, but I don't get that follow through that I want. And because that move going lower is so strong, again, strong moves love to retest. Oftentimes we'll see another leg going lower, another leg going lower. They'll retest that low. Now you tell me, guys, you tell me, knowing that range above us is a magnet, would this be a good place to sell short? Can I risk small to earn large trying to sell down here? Of course not, right? My reward is here. My risk is all the way here. This is a horrible spot to be selling down here. Bad spot to sell, great spot for, you guessed it, a bear trap. Do it again. These double bottom retests in a bullish range, double bottom retest are oftentimes the most lucrative trade we see in our trade room, because now rookies start thinking, wow, maybe this is a full-blown reversal. Even if it is a good reversal, right? It's still a horrible spot for risk reward, which is a great spot to trap in some rookies. Let them try once, let them try twice. Now, why twice? Because if you're caught short down here, if I buy into your stops, if your stops get hit, what happens? You buy your way out of that short position. It is the definition of a short squeeze area on the chart. Buy right into those stops. And remember, if you want to make more money, don't overcomplicate this. Just simply add to your winners. We know the market now wants to rotate back up into that range overhead and potentially slingshot running higher. The way you do it is you look for that same pattern back there, right? That strong run up, that shallow pullback that separates off that moving average, that higher high in price, get right below that low, strong green candle. That's your signal, right? Over here now, right? Higher high in price. That pullback barely comes back and misses the moving average. We get right below it and bam, right? There is our, we call a failure into trap combination. Whatever you do on this, leave a runner, right? Leave a runner because the amount we go below the range, project that now above the range. That creates our target. That also tells us where the market now will break free into a breakout pullback, which reminds me, at what point can I start buying up here? How would I trade a breakout pullback? Good question. There are 3 variations of breakout pullbacks. Let's do those now on the Nasdaq. Nasdaq obviously got beat up a little more here because Nasdaq, of course, is a bunch of tech stocks compared to the S&P 500. Before we dive into the Nasdaq, though, which is very similar here to the S&P, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this video link with other trading buddies because YouTube rewards me, believe it or not, every time you like, share, and subscribe. I know we're all busy people these days, and I really appreciate you guys spending a few minutes with me here every evening here on these videos. So thank you so much for the likes, shares, and all the ongoing support. Now I'm done begging for likes and subscribes. Let's dive in and talk about the Nasdaq. As you can see, the Nasdaq, again, we were very bullish, right? Very bullish into the weekend this weekend. Then we hear from the DeepSeek, right? The DeepSeek AI model, as we call the trade room, the Chat GPT killer. Don't get too wrapped up in the story behind it. Trade the chart in front of you. This is a very strong rundown. It's going to want to retest that low before we go out and resume the overall bullish market we had going into this weekend. Let's now drill down to our tick charts here. Again, we're not trading off time charts in our trade room, and you'll notice right away here, there is another big clue here, a bullish move into a trading range. Now, I mentioned earlier, this range anchors this price higher. It's a magnet. And again, ranges love to rotate. They rotate back and forth using things like expanding triangles, things like pendulum swings. You'll learn more about this inside of our free video classes. We mentioned earlier, my favorite trade for tomorrow will be allowing this market to go lower, let these bears get trapped in down here and squeeze their stops running higher. If you understand how bullish ranges work, a bullish range, if we bear trap off that low, this rotation higher becomes very, very aggressive. It's why I call it a slingshot reversal. It's a big move down. The bears are trying to retest, but again, that bullish range makes it a lot more difficult than it would be without that bullish range. Okay, that is what leads into a slingshot reversal. Now, we may not get that run down. We may not get that run down. As I mentioned earlier, we're probably going to hear more overnight, next 12 to 18 hours, about what this DeepSeek really means for, well, all the money they've spent building out the AI models for ChatGPT and Meta and all the rest of them, right? That's, of course, is the big concern. This may blow over overnight here, and we may find ourselves rolling higher here overnight. Now, I do not want to buy high, right, as we're going higher. I mentioned earlier, there are 3 different ways to trade a breakout of this trading range. The first one is a true breakout pullback, a true breakout pullback. Now, when I say breakout pullback, remember the pendulum swing, the amount below, the amount above. I have resistance right here and resistance right here. If we can get a convincing break through those areas, and what I mean by convincing is I want to see it pop up. I want to see some separation away from that moving average, right? Separation equals strength, a higher high in price. Now watch how this works. It's a very, very simple sequence. Whenever I talk about a breakout pullback, again, strong pop up, shallow pullback, doesn't pull back to the moving average. One right there, right? We go up, we shallow pullback, we go higher high, right below that low. Okay, same pattern we mentioned earlier there on the S&P. That sets up now, it's a classic bear trap. Most important thing though is is to remember that anytime we see a range breakout, the breakout leg is used as a measuring leg. The breakout leg is the measuring leg. So once we know how big that initial breakout leg is, we can buy that bear trap going higher and use that measured move for a target. Right? Makes sense? Okay, so breakout leg, measured leg. The first trend I'm looking for on a breakout pullback is actually a bear trap. Higher high in price, shallow pullback, buying below that low that we saw over there. Okay, now once we know where that measured move is, that gives us now our profit targets. Now we look for the breakout pullback. When I say breakout pullback, I want you to think about a two-legged pullback. So 1 and 2. When I say two-legged pullback, think about a measured move. One leg, two leg, at least a measured move. My favorites go a little bit more than a measured move, but at least a measured move, okay? So again, it's a breakout with a bear trap entry. We have the measured move. Once we reach that measured move up there, we now start waiting for the pullback. It's a two-legged pullback. Now, that will give me the general area of where I want to buy this breakout pullback. I have no crystal ball. All I know is, I don't know how big the breakout will be. All I know is how I want to calculate that two-legged pullback. That will give me now the support level here. Now, at this point, I'm not going to pick a bottom on this. For all I know, it'll run all the way back down again and we'll get that slingshot back up from there. What I do know though is if I have this much momentum, it's a very good chance here we're going to go back and take out that high. Strong moves, love to retest. So do it again. That failure into trap combination. 1 try for the bears, 2 try for the bears. Squeeze those stops. And again, we'll add to our winner or jump back in case you got bounced out somewhere along the line there, right? Grab that, again, grab that bear trap, separation of the moving average, that trap below that low. Target, of course, is back up to retest the high. This is a classic breakout pullback. It's a bear trap going up. It's 2 tries to a measured move. It's a two-legged pullback with a seller failure pattern into bear trap combination. And again, I realize if you're watching for the first time right now, this may be way over your head, but take that free video class. I mentioned earlier, all the links you'll need in the description of the YouTube video. This will make a lot more sense once you learn all the entry tactics I'm talking about here tonight on this video. One more type of breakout pullback is what we call a pop and grind breakout, okay? Now repeat after me. Anytime we see a pop and grind, anytime the market pops and grinds, it's a very strong trend and very difficult to stop. Okay, anytime we see a market pop and grind, right, it separates away from the moving average, that is a very, very, very strong trend. Because of that, I can now go out, mark a trend line off the highs, bring that trend line now off those recent lows, look left, and be a lot more aggressive now at buying that first test off the low of that channel, all right? So a more aggressive way to trade a breakout pullback is not really a breakout pullback, not really a breakout pullback at all. It's a pop up, again, into a grinder. It pops and grinds. It separates off that moving average. I'll use a bear trap entry. I'll use a failure pattern entry. Any of the entry patterns you guys are learning inside that free video course can easily be applied there at the low of that channel. And one last thing I want to talk about. What if we break out and go into another range up here? You know, we have FOMC on Wednesday, big earnings on Wednesday and Thursday. Would it surprise anybody if we popped higher, broke out of the current range, and went right into a new choppy sideways range? Not at all. And remember, whenever we see a new trading range, that anchors this market higher, right? It anchors us higher and also, too, becomes a magnet. Now, that's important because now that previous range now is great for a breakout pullback. Whenever we have multiple ranges, the new range is the new magnet. The previous range becomes ripe now for a breakout pullback. Now, you can probably kind of estimate or assume what I'm going to say up first here, right? So if we have a new range up here, let's wait for a breakout. Let's trap those bears in below that 21 EMA, 1, 2 tries to run their stops. Let's use that failure pattern into trap combination. Now remember, this is why ranges are oftentimes the most lucrative trades we get, because now, where does the market now want to go? It wants to rotate off that low. I will take a little bit off at the high of day up there. It's a good spot for a target. But again, right, leave a runner, mark the amount below, mark the amount above. That creates our final target. Again, if we pop up overnight and go into a trading range, think about how I can trap bears in below that trading range, use those failure patterns, add more to your winner with that bear trap pattern. Again, a lot of examples of those inside the free video classes. We'll try to use that previous range as a key area of support, right? And again, as it rotates, as it slingshots off of that low, leave that runner, amount below, the amount above, and that, of course, is the game plan if we wind up going sideways here overnight after it pops up. All right, guys, boy, I'm getting excited for the rest of the week this week. Most important thing, though, is that's the plan for tomorrow morning. Now, speaking of tomorrow, the place to be every morning is in our trade room. Guys, the easiest way to start making money in these markets is to learn and trade along every morning, 8 o'clock Eastern time at the opening bell. I'll put all the important links you'll need to learn more. All the stuff you'll need to learn more there in the description of this YouTube video. Start first with the free video course. Enjoy all those trade examples. Everyone loves the free video classes. Then come join me in my trade room and we'll do it together. In the meantime, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.